Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the United Kingdom because things are not going well.
UK markets tumbled yesterday, pushing 30-year gilt yields to the highest level since 1998.
If you've been following the channel, you'll know that the UK has a new government. It took over in July 2024, and one of the first things that it did was state a budget in October. And basically in that budget, there were a lot of tax rises. Well, they were sort of secret tax rises. They came through things like employer national insurance. So it didn't hit the man in the street, but it hit a lot of companies. And the UK is now struggling in terms of its economy. And as you saw right at the start of today's video, bond yields are now trading at their highest level for more than 26 years. And bonds are basically the way that governments borrow money. So when a government wants to spend, it issues bonds in exchange for cash and then uses that cash to do whatever it wants. And the Labour government has stated that it wants to invest into the public sector and also increase investment. And one of the problems with that is that it increases debt. This chart shows the movement in UK government debt over the past 50 years, and the scale on the right-hand side of this chart is shown in trillions of British pounds. And what you can see from this chart are three very clear trends. In the period between March 1975 and April 2008, UK government debt increased at a relatively slow rate, increasing over that 33-year period from £52 billion to £569 billion. However, following the global economic crisis which struck in 2008, government debt started to increase rapidly, and by March 2020 the total amount of debt outstanding had increased to £1.8 trillion. However, over the past 5 years, as a result of the COVID-19 pandemic and the problems seen around the globe as a result of Russia's invasion of Ukraine, there has been a further increase in the rate of public borrowing, and the total amount of government debt today is sitting at more than £2.8 trillion, which is the equivalent of around $3.5 trillion US. And this chart looks at the ratio of that government debt to gross domestic product over the past 25 years. And what this shows is that in the period before the global financial crisis, the ratio is running at less than 35%. Following the crisis, it rose to around 80%. However, over the past 5 years, we have seen a further increase in the ratio, and it is now running at around 100%. Now, as we saw at the start of today's video, bond yields in the UK are running at their highest level for more than 26 years. And what's happening in the UK at the moment is that the price of bonds is going down as a result of the fact that fund managers around the world are selling them. And the reason that they're selling them is because they're concerned about the UK economy. It isn't because they think interest rates are going to move. They're worried about the strength of UK growth. In normal circumstances, when bond yields go up, it generally is good news for the currency of that country because fund managers around the world will want to buy into those bonds because they can earn a higher rate of return. However, the opposite is happening in the UK right now. This chart shows the movement in the exchange rate between the British pound and the US dollar over the past 12 months. And what this shows is that over the past 4 months, the value of the pound has crashed, and it's now trading at the lowest level that's been seen for more than 12 months, since November 2023. And the reason why the relationship between bond yields and the value of the pound has been broken is because everybody is concerned about what's happening in the economy. So fund managers aren't worried about getting paid a higher yield. They're more concerned about potentially losing value in those bonds. And so they're pulling back from the UK and selling their holdings. And this is really bad news for the UK government because their plan over the next 5 years is to significantly increase the amount of bonds that they're issuing. And when yields are going up, what that means is that it increases the cost of that borrowing for the UK government because they have to pay the bond price, they have to pay the coupon on those bonds, and the coupon will be set at the prevailing market rate. And currently, those rates are sitting at their highest level for more than 26 years. This chart shows the year-on-year movement in gross domestic product, measured on a quarterly basis over the past 3 years. And what this shows is that over the past 2 years, the UK has been struggling to achieve significant GDP growth. And in the final quarter of 2023, GDP actually fell by 0.3%. Over the past 3 quarters, there has been an improvement, with GDP growth hitting 0.3% in the first quarter of 24, 0.7% in the second quarter, and 0.9% in the third quarter. However, concern is now rising because the month-on-month analysis shows that in September and October, GDP contracted in the UK, and this trend is expected to continue into 2025. And a recent Bank of England survey confirmed that UK firms are planning to raise prices and cut employment as a result of those tax hikes. So what's the summary and conclusion today? Well, I wanted to post this video because the UK is the 6th largest economy in the world and the 2nd largest economy in Europe. And as we've been talking about in recent videos, things are not going well at the moment. And what we've seen in today's video is that bond yields are now sitting at their highest level for more than 26 years. And that represents seriously bad news for the UK government, because their plan over the next few years is to borrow from the markets. They want to borrow via bonds, issuing lots of government debt in order to put the money into public infrastructure and public utilities. Now, the problem with rising price of debt is that obviously it increases the burden on the government. They're going to have to pay the interest on all of those bonds. But it isn't just about that, because as we've talked about, there are serious concerns right now about what's happening in the UK economy. GDP has gone into negative territory. For the last 2 months, we have seen a fall in GDP. And if that continues, we will see the UK potentially moving into recession. And that represents a major problem for the new Labour government, because if the economy is slowing down, that means that the level of taxes will start to reduce because there will be less profit and less money to actually tax. And in those circumstances, the Labour government would then have to resort to austerity, because they've said that they don't want to increase taxes any further. And what that would mean is that we would see problems in the economy, and that potentially would lead to a reduction in the popularity of the current government. And they are already struggling, even though they've only been in power for around 6 months. There's been a huge backlash in the UK. There was a Conservative government that was in power for more than 10 years. Everybody got sick and tired of them. They had the COVID pandemic to deal with, and then Russia's invasion of Ukraine and high inflation and all the other problems that have been global over the past few years. And so everybody wanted a change of approach. The new guys have come in, but unfortunately, they haven't managed to change anything fundamentally. And so the UK is now in a slump. And if we see a continuation of this bond sell-off, that's going to push up yields even further, increase the cost of borrowing for the Labour government at a time when that's realistically their only option to boost the economy. So as it stands at the moment, there are some serious issues starting to build in the UK, and it's going to be very difficult for the new government to be able to sort these out, and we could see the situation getting significantly worse over the next 3 to 6 months. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.